Hey, my name is Durden. I am in charge of communications and tokenomics at Lifinity. And something that not many people know about me is that I'm a big fan of Smash.
Welcome to Solana Insights. I'm your host, Moo, and today we'll be chatting with Durden from Lifinity. Welcome to the show, Durden.
Thanks, man. Glad to be on.
All right, so today we'll be talking a little bit about Lifinity, and Lifinity Protocol is a proactive market maker designed to improve capital efficiency and reduce impermanent loss. That is a very concentrated sentence filled with many degrees of awesomeness. And we'll definitely get to that and breaking that down. But before we go there, let's get to know the man behind the magic. And you mentioned about Smash, so I would definitely want to ask you about Smash. I play a lot of Smash. So what's up with Smash?
Yeah, so I guess Smash has always been a big part of my life, or yeah, maybe big is an overstatement. But like when I was a kid, I played tons of um, 64, Smash on 64.
Nice.
I didn't have the game at my house, so I had to go to my friends, and I would always be calling up my friends, see if I could play Smash with them. I probably annoyed them. But later in life, actually after I graduated, so I mean I kept playing somewhat throughout the years, but after graduating from university, I got really deep into Smash Ultimate. Actually, I guess before
Great.
that, I became really into Melee as a spectator, especially. I
Melee
tried
was
playing
dope.
it a little bit. What's that?
Melee is dope.
Yeah, Melee, I would say, is like my favorite version of Smash.
Hmm.
But like the one unfortunate thing from my perspective is that um, basically it's related to like controller stuff. So like all the best players are entrenched in a control in like the using the Nintendo, or rather the GameCube controller, and like it's very unergonomic. It's
Mm,
like a lot of the techniques are like very convoluted if you have to do it on that controller.
yep.
And like from my perspective, it's just like what's the point of this? Um, of like limiting it to these controllers, and like everyone, all the pros are like modding their controllers with like notches and making sure snapback doesn't occur. I don't know if I'm getting like too technical into the weeds, but like all these things where you have to have like specialized controllers just to be able to do like simplified or like simple techniques. It's like it's very unfortunate me for from my perspective, which is why I
Mm,
switched to Ultimate. It's just like more user friendly, even though like I don't like the game as much because it has a much lower skill ceiling compared to Melee and much
Melee's
less
the
history, of
highest.
course.
Yep.
Yeah, so I played Ultimate competitively for a few years.
Nice.
Um, yeah, I don't really play much anymore. Now I just watch mainly Melee.
Ultimate
But yeah, I love
Ultimate
Smash.
Ultimate is on the is it on the Switch?
Yeah, that's right.
Right. So that's dope, dude. So you played competitively for Ultimate for a while. So I actually played competitively too, but I think way before that, probably in the era of the 64, I used to play for play Command and Conquer, Red Alert. That was my foray into
Um,
competitive gaming.
Combat and Conquer. I'm not familiar with that.
Command and Conquer. So it's like an RTS game, similar to StarCraft, but like a different universe.
Okay,
Yeah. So that's
nice,
kind of,
nice.
so we have that one connection there. Gamers.
Yeah.
Right on, man. All right. So um just to get to know you a little bit more, this is a straightforward question. Durden, are you happy with your job today?
Oh hell yeah! Like actually, when was it? I just talked about this recently in some audio format. What was it? It might have been our community AMA.
Mhm.
But yeah, this same exact question came up, and I was like, yeah, this is actually the best job I've ever had because it's very intellectually stimulating for me, which I can't say about any of my previous jobs, I think, or at least like not to the degree that this
Mm,
job is. It's kind of like one of those things where, uh, I would, in a sense, like be doing it anyways, if
Mm,
even if it like wasn't my job. I mean, like not every aspect, obviously, but like especially like the research aspects and stuff. Like
okay.
a lot of it I was kind of doing before, anyways,
Like
sort of.
research aspects.
Yeah, like so. I mean, with regards to Lifinity, like we're trying to like as protocols do, like expand our functionality and integrate with other protocols. So like thinking about ways that we can do that that are win-win for both Lifinity and the other protocol, or even if it's just like within Lifinity, like changing, for example, like adding new pools or like making changes to how we use the protocol funds or
Mm,
the NFTs that we've bought back or stuff like that. There's like so many possibilities. So like thinking about that
yeah.
stuff is really fun for me.
Nice. I mean, Web3 is open. It's an open thing, right? This
Yeah.
it's so unexplored. So
Yeah.
usually, as a I don't know, as a startup company or as you know, as a small team, it's usually pretty lonely and a hard one. And I think a lot of people, they see the success of like Steve Jobs, Jeff Bezos, but not so much the struggle. So there's a lot of uncertainty in the early days, and I guess for in comparison to most things that's available today, like crypto is still super new, and the fact that all of us are probably less than a year old in terms of our companies, it's super early days. So yeah, so has there been any like days where you found it hard to get up and continue on?
I wouldn't put it exactly like that. I think one of the struggles for me has been um, the disconnect between the crypto world and my my life, like everything else in my life. Like so, like all my friends, like I get some of them are familiar with crypto, but they're like nowhere as close into the weeds as I am. So like I can't talk about like anything technical with them.
Mm,
It's basically, it just goes to, like what's the latest change in price of Bitcoin type of thing, which is
it went up.
like what's that?
It went up a little bit.
Yeah, yeah, exactly. Um, so or like people who know that I work in crypto, they're like, I heard crypto went down a lot recently. Are you okay? Type of thing.
I know, right? Especially
So
when Luna blew up.
yeah, 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 exactly. So like that's kind of unfortunate. I wish they were more connected. Um, but yeah, they feel very separate. So
Mm,
yeah, that's an unfortunate aspect of it.
it's true though. Like I have a friend who I think the only like real life friend that I know that trades crypto, and she mentioned that she no longer has any more friends because all she wants to talk about is crypto, and no one would entertain her because they don't care about crypto or they think it's speculative asset, and she is basically plotting her own downfall. So yeah, it's hard. And I think not many
Yeah,
people notice, but mm, somehow or another, I think you start to make a whole bunch of new friends in crypto, even though you don't really know them. And I don't know for you, but for me, like in my server, it feels super at home right now. And I can connect to these people who I've never met in my life, like better than some people in real life.
yeah, I definitely like actually really enjoy spending time in our server. I've gotten to know a bunch of community members pretty well, or at least like it feels like it. I
Mhm.
guess I don't know, their personal information at all. But just like being able to converse with them
Yep.
and like really enjoy that and like, just really being able to be myself.
Yeah.
Even though like I am, a core contributor, even then. So yeah, that's fun.
So I think that speaks to the crypto community, right? And honestly, like I come from DeFi as well. So I started my origins of DeFi, trying to build awesome things like you guys at Lifinity. And I used to think that NFTs are just like a huge fluff. Like, why would you buy a JPEG that does absolutely nothing for 100 grand, like a monkey JPEG, BAYC or MAYC, whatever you may have it. And people keep talking about like community, and I was like, I don't know what that is. And I actually bought my first JPEG on Solana, and I lucked out. I bought an OK Bears, and damn, like now I understand what community is. But it's really awesome to see that even in a DeFi protocol like yours, there's still a really strong community. And I think in a bear market, that's pretty much is going to be the thing that tides people through.
Yeah, I had a wake up moment last year, like in May or something, when I first joined the Grape server.
Hmm.
And they had a very vibrant community at that time, at least. Like this was before like a bunch of the NFTs blew up and stuff. I think they may have had the most vibrant community, and this is like
Nice.
before their token launch. So there's also like this, like somewhat of a FOMO aspect where like people are trying to get the OG role.
Discord
um,
grinding.
yeah, that era.
Still
um,
happening. Still happening, by the way.
yeah, I guess so. But yeah, I joined that and I was like, I mean, like you said, I had like I had, sometimes heard people talk about community or whatever, and I was like, I just didn't understand it all. But then like it was really palpable there.
Mm,
And that like really changed my mind about like I guess the power of crypto to like bring people together in like
yep.
a semi personal way. I just
Yep.
hadn't experienced that before. Like before that, it was just buying and selling assets for
Transactional,
me.
right?
Yeah, exactly.
Yeah. Same here, man. And I think that's the difference between like DeFi and NFTs. Because NFTs, there's really nothing else about it. I think in DeFi, you're kind of experimenting with new utility or new ways to kind of build your stuff. But for most projects in NFT space anyway, it's just like, oh, we've released our JPEGs, we're done. Add maybe one or
Yeah.
two small utilities, but that's kind of a bit more um bit more recent. I think prior to that there was zero utility at all. So yeah, everything is all about the hype, all about the community. So it's interesting to see how the space is evolving.
Yeah, for sure. I wish I could because I wasn't in any of like the major NFT projects from the start.
Mhm.
So I wish I could have like seen, like witnessed their trajectory, like as that community was built up, like see that process because I didn't really get to see that. So it'd
Oh
be
yeah,
really interesting to see.
me you both. So for the flares, was it similar in terms of the journey that you see more people from the NFT sites coming in?
Let's see. I mean, so our project, Flares had like utility right from the very start.
Mm,
And I think the vast majority of the people buying in um, bought in for that very reason.
okay.
Um, like even while the sale was going on, like some people were like creating this narrative that we were um, SSC, the shadowy supercoders, um,
Yep.
round two type of thing. Like,
Oh.
did you miss out on SSC? Well, get in on the flares type of thing, which we had never claimed or anything. But just because we had utility and so did SSC, like people were making that kind of connection.
Because you guys are super rare.
What's that?
You guys are super rare to have utility with NFTs. That's super rare.
Yeah, I guess so, especially back then. Like it's probably more common now, but
Mhm.
yeah, it was just like that narrative of utility NFTs was like just getting started, I think.
Mm,
So yeah, like so in that sense, I might say for us, like the community aspect was probably relatively weaker compared to a bunch of other NFT projects where like you have to succeed in the community aspect to succeed at all.
yeah. So
Um,
it's a
yeah.
super interesting topic because I've heard different people say completely opposite things, right? There's a post today I saw saying that, oh, you should not add utility to your NFTs because how it works in this game, this marketing game, is all about hype and anticipation. So if you release the utility, then that hype kind of goes away. But if you don't, it's just an anticipation, it's just a hype thing. and that's infinite, right? It's up to people's wildest imagination what you can do. So, do you think that
Yeah.
which side do you stand on actually?
I mean, I think community is very important. Even so, like I'm just like just using our project as an example. I mean, I just said like our like the community aspect was probably relatively weaker for us.
Yep.
Nevertheless, like this was an incredible way to bootstrap liquidity, like
Yep.
from the perspective of our protocol. I mean, because we have the NFTs and the tokens,
Mm,
and the tokens came later. And having a community before we launched the token was like so important.
mm,
And like we got so much more visibility because we bootstrapped that bootstrapped that community rather, through our NFTs. Um, and like most of those people are still with us. And so like that aspect has been very, very important to us.
do you think there's a difference in launching something like a utility NFT in a bear market versus a bull market?
Um, let's see. I don't know. I don't know if I'd have much of anything insightful to say there beyond like, the fact that, it's easier to sell out during a bull market and you'll get more visibility during a bull market.
Mm,
I guess one difference would be like if you're successful during a bear market, that probably shows that you're more likely to have longevity. Whereas if you're successful in a bull market,
yep.
then when the next bear market comes around, um,
Yep.
like your success will be brought into question. Whereas if you start in the bear market, like that doesn't happen. So
I think Tolly tweeted this a couple of weeks ago. He said exactly this. If you can launch in a bear market, that's a strong signal. So I think like, okay, maybe a different angle here. If you something like it, okay, so Lifinity is a very special project in terms of its NFTs as well as its tokens, right? You guys have actual utility, you have actual revenue, which in my opinion is a huge win. I don't think I think 99% of projects don't actually have legitimate revenue, and you guys are, the 1%. So when we hit a bear market, I think that's where projects like Lifinity starts to shine because when the hype goes away, when all these noise goes away, the tourists have left. The only thing you can really hold on to, community aside, is tangible value. And if you don't have the tangible value, theoretically, there's nothing stopping you from going to zero.
yeah, 100%. Um, I think like all projects have like some level of revenue because they have royalties. But the problem with royalties is that it's correlated with demand for the NFTs. So
Yeah.
like when you're pumping, you have tons of royalties, but as demand wanes, then you get less and less. Whereas for us, we have that as well, but we also have the trading fees from our decks. And this is totally uncorrelated to demand for flares.
Yep.
People just keep trading. So yeah, I think that will be an important consideration going forward for new projects. Like, can
Hmm.
they come up with some way to earn revenue that's not tied to demand for their NFTs?
I don't even think it's demand for their NFTs because so we've used the word revenue, right? And I think when we talk about revenue, it's kind of money that the project receives. So you're right in the sense that one angle is um is royalties from the trading. But if you think about it, like revenue in this sense is to the project, but it doesn't actually go to the holders because in theory, the holders are the one paying that money anyway. So it's kind of them paying back to their own pocket. So it's not in theory, I don't know if you can consider it revenue for the holders, which is why something like Lifinity is different because your revenue source is not from the holders, it's from people that are outside of Lifinity, people who are trading on, Dexus, on Serum, Radium, wherever you have, any of these things, but it's a completely separate source. So that's super rare.
Yeah, yeah. I guess that is a important difference. It's kind of like the royalties is kind of like a tax on new entrants
Yeah.
and those exiting.
So if you think about it, it's a zero sum game, right? Or maybe even a negative sum game, because
Right.
the same guys are basically paying the guys who think they're investors are actually not investors; they are consumers. So that's the biggest problem I see. So I'm super excited for for projects like yours where there's an actual source. And I think I read somewhere that it was like 160,000 USD in terms of revenue that you guys have given out.
So that was probably for the previous month. And specifically that was, let's see, so that was the total revenue generated for VE Lifinity holders. So that's actually separate from the flares.
Wow. So there's more.
Yeah, yeah.
Wow.
Yeah, it's kind of convoluted because like there's these two separate um pools of liquidity. The protocol owned liquidity, which is what the VE Lifinity holders have. And then
Mm,
there's what people have been calling the flare owned liquidity, which is owned by the flares.
okay.
And yeah, so the flare owned or like what's generated for the flares, we announce in our weekly uh infographics.
Mm,
And yeah, they usually earn about 200 no yeah, I think like 200 to 300 Sol per week, something like that.
yeah.
And another difference from the flares and the VE Lifinity holders is that with the flares, we don't distribute the earnings directly. It's all half of it is used for buybacks and half of it is reinvested into the liquidity pools so that it just keeps growing.
Yep.
Whereas with the VE Lifinity, we half is used for buybacks as well, but the other half is directly distributed to the VE Lifinity holders. So yeah, it's kind of complex.
Super complex, man. I'm in DeFi for so long and I'm still trying to understand liquidity. So hopefully today we can kind of break it down just a little bit more for the users.
Yeah.
All right, let me jump back. So rewind the clock. So you guys started in, or you joined in November, right? So, but when did Lifinity start?
Yeah, so the idea for Lifinity, um, so basically the market making mechanism of the DEX are two uh, main devs, which are Luffy and Zoro.
Hmm.
They came up with that. I think it was around May, and they started building it. And yeah, the first version of the DEX was released in, I believe it was September. I'm not 100% sure. This was before I joined the team, so
All
but
right.
yeah, something like that.
Wait, he started building May?
I believe so.
That's
Yeah.
crazy. That's like the land before time. That's, I
Yeah,
think
that was
that's,
like the time before Anchor, maybe.
yeah,
So yeah. uh
that's
Not as
crazy.
smooth a of a developer experience back then.
Okay. And then you came on in November?
Yeah, that's right.
Okay. And how has it changed from then till now?
Yeah, so the original vision of Lifinity was to create a DEX and also create an aggregator. So basically, they wanted to give traders on their platform to guarantee that they're always getting the best price.
Right.
One major change is that we pivoted away from that, mainly because Jupiter appeared on the scene,
Yeah.
and they were not there when this vision was originally conceived. But yeah, then Jupiter came around where they're solely dedicated to building an aggregator. So eventually we decided it would be better if we just focused on the DEX part, let them handle the aggregator part, and then just work together,
Mm,
which is what we're doing now. And it's working great, I would say.
great plan.
Yeah. And sometime, I think, so when I joined, they already had a plan to create NFTs as a way to bootstrap liquidity.
Okay.
And so, yeah, I joined and then we tweaked some of the details of that. But yeah, basically, it was a way to bootstrap liquidity for our DEX without using token incentives, which is like the most common way to bootstrap liquidity, I think.
It's a terrible way.
Yeah, the problem is it's temporary, right? It's like
Yep.
as long as you're providing incentives, people will keep their liquidity there, but once you stop, it just goes away.
I call it mercenary money.
Yeah, it's precisely what it is.
Yeah. Okay. So
um,
NFT bootstrap.
yeah.
Did it raise anything before that?
Did we the team raise anything for that? You mean?
Yeah, the team.
Yeah, so we didn't take any profit in any way from the sale of the NFTs or in any ongoing manner. So we don't take any of the royalties or any of the trading fees or
Oh,
anything.
wow.
Yeah.
But you guys need to eat, right? So where's that money coming from?
Yeah. So this is part of the reason why we did a token sale later on.
Ah,
Yeah. And the TLDR of the token sale is that we use 20% of the USDC raised for continued development. So that went to the team. And then the remaining 80% was placed in our DEX as protocol owned liquidity. And that's what's earning the revenue for VE Lifinity holders right now.
got it. But you mentioned like the ongoing operation. So can you said you don't take any of the revenue. So how does that work? You can't just live off a fixed pot, right? Because that's going to keep dwindling.
Yeah. So yeah, it can't last forever. I will say that we are pretty well funded. We can continue developing for multiple years based on what we received from the IDO that we did.
Okay.
So yeah, we're in a good place. But yeah, it can't last forever. So one of the things that we introduced in our tokenomics series on Medium is that the so after 1 year after the IDO, 10% of the revenue that's generated from our decks will
Mm,
start to be directed to developers, and
okay.
that's it'll probably start off as us, but eventually we hope that that part also becomes more decentralized,
Mm,
um, and so it just becomes a random group of developers accepted by the community for ongoing development. But yeah, to start, so that will also help us to continue develop the protocol.
cool. So that's a DAO portion, right?
Um, I
Or
wouldn't
not
call it that
really? Okay.
because like it's going directly to developers. So it's not like it goes to the DAO and then the DAO, I don't know,
Besides.
makes some decision. It's just going
Okay.
like straight. Yeah,
And then developers meaning you guys, right?
correct. Yeah.
Okay. Yeah, we'll see how that works out. I mean, like, you definitely need some sort of revenue stream coming in. I'm sure the holders are super happy that everything goes back to them, but there has to be some degree of sustainability. So, like, is there like a how is it like working with Affinity? Do you guys have like an office together? Is it like a 5-day work week? 7?
Yeah, so we're quite decentralized. I've actually never met in person any of the other team members.
No way.
I
Damn.
Yeah, I believe all the other team members have met in real life, and actually, Luffy and Zoro used to work together. So
Okay.
yeah, there's that. But yeah, we're also like in different parts of the world too. So it's
Uh-huh.
a pretty decentralized setup, I guess.
Okay, and that's an artist you mentioned, right?
Yeah,
And she's like decentralized too.
yeah. Maki is also um, uh, decentralized. I actually don't even know where she
She's
is.
somewhere. She's in Web3.
Yeah, yeah, yeah,
I love it,
yeah.
man. Yeah,
It's
cool.
like these details don't even matter because they don't really affect us, I guess. Except for like like if we need to do a call, just make sure we're up at the same time, type of thing.
Mm.
But that's never really been a problem. So
So what's the work week like? Is it like a 5-day thing, or are you guys are like around the clock?
for me, like it's kind of how do you say, like free. Like there's no like strict rules per se.
Hmm.
But basically, I check Discord every day. So, like in a sense, I work every day, even though it doesn't like exactly feel like that.
Me, you both.
Yeah. Like sometimes I spend more time on Discord, sometimes less. Um, there's just a lot of variation.
Okay. So like so do you have like KPIs? Like what's the how do you decide if someone's working hard or not? Or I don't know, like Luffy goes like, yeah, they're to need to do more things.
Yeah, that hasn't happened yet. I mean, I think I'm very so like as an individual, I'm already very self motivated type of person.
Sounds like it.
Um, so like I'm always like finding new things that I can do.
Hmm.
So yeah. And so Luffy is our manager, so like he has the best view of like who's doing what. So like
Okay.
I have less visibility into like what the devs are doing. So like I don't know. I can't really speak to that, I guess.
Do you code as well?
I can code in Python, but I've never like worked as a developer, so like probably a bunch of my coding practices are immature.
It's mainly just dealing with the community, right?
Yes, that's a huge part. Also, a lot of writing, communicating with other teams, um, marketing ish stuff like
Mm.
that.
So you mentioned you're a pretty self-motivated guy. Like where do you think that comes from?
Uh,
Values, upbringing?
um, let me think.
So like different people have different motivations for why they do things, why they wake up, right? I mean that's one of the questions I asked earlier. And you mentioned that you like your job. You would still do it even though you don't get paid. But that comes from somewhere. Just curious, like
Yeah, and I was just thinking about my upbringing and wondering whether that had an effect. I think it probably didn't.
oh,
Um, yeah, most of it, if I had to guess, like it's probably mostly just the fact that I find all of this very interesting. But I guess that's specific to like this topic. Like I don't know why, as a person, I'm self motivated. I don't know where it comes from, but yeah, it's just the way I am. I think.
so your values are not the critical factor to what shapes your work life right now. Is that accurate?
Yeah, I think so. I mean, like I have no puritanical like way of thinking where I think
Mm,
it's
okay.
like correct to work hard or something. Like I feel like if people don't want to work much, that's totally legit too.
So
So
if I would ask like Luffy, like, oh, describe Durden in one word, what would he say?
oh man, I'm not sure. Maybe detail oriented.
All right, it's 1.5 words conjoined.
Is it yeah, joined with a hyphen.
Hyphen, I love it. Cool. Yeah, it's interesting, right? Because different people have different motivations. So it usually stems from value, but I think yours is a completely different thing. You're genuinely interested and curious, so that's cool.
Oh, you know what? I
Um,
think so to be honest, I think
mm,
probably another part of it is like I probably enjoy like social validation because
oh,
like I am um like the voice of Lifinity, right? Like
literally
if
right
anyone wants to
now,
keep up, what's that?
literally right now, yes.
Indeed. If anyone wants to keep up with Lifinity, like they just see me writing or talking or whatever, right?
Yep.
And I mean, like I'm only human, so I think like when people like what they see Lifinity doing, like that makes me happy. So I'm sure like that is also part of my motivation,
Hmm.
even if I don't know, that's kind of like embarrassing to admit. Maybe I don't want it to be like that, but that's probably the way it is.
That's the point of this podcast, man. Real talk. I mean, like the dopamine, yes, the dopamine thing, right? So it hits you.
Yeah, yeah, exactly.
It's 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 the way like I think all of social media has been engineered, super engineered. You have your like button, you have your like follow, your upvotes, your retweet, whatever it may be, your emojis or react. All this is meant to keep like reinforcing that social validation. And I personally am very curious to see what happens when we move from a Web 2 world to a Web 3 world and people are anonymous because, and feel free to disagree. I think a lot of us behave differently when we're anonymous online versus who we are in real life because you're behind a keyboard, no one really knows who you are, and to some degree you're more able to be who you are because there's no expectations anymore or
Yeah,
societal
I
pressures. Yeah.
yeah, probably. So just speaking for myself,
Yeah.
I feel like there's very little of that particular effect for me. So for me, I think any difference in my behavior probably comes not from the fact that I'm anonymous, but the fact that I'm talking online. And like, for example, like my tone of voice
Mhm.
is tends to be quite different in writing compared to talking. I've got this feedback pretty often throughout my life, actually, where in writing I tend to be, or I tend to sound like confrontational, frank,
Mhm.
um, not not very warm, like cold. Whereas like when people actually talk to me, they know I'm not like that. So even like people who know me, they still feel like I'm cold when I chat. Yeah.
So the secret is I need to call you if I want to chat about anything.
Yeah, if you want nice Tyler Durden.
All right, cool, man. Well, I think it's also the medium, right? Because when you talk, you have a you have other things that you can pick up on, tone of voice, person's emotions, and when it's text, it's cold. I think naturally texts are always cold. And personally, like when I run my own business in real life, if there's anything that needs to be settled and it's semi-sensitive, meaning someone's maybe unhappy, someone like like is asking for something that whatever it may be, it's always best to call, and then you can summarize and text later, but it's always best to call.
Yeah. Yeah, I think, yeah, you're right that it is like just the way that text is. On the other hand, I do think like it is a skill that can be developed. I think I've definitely improved over time, especially on Discord. So like one thing I love about Discord is the diversity of the emoji that's available to you. And like I've used this to my advantage a lot. I think, I hope, just to like convey certain emotions more clearly. Like just adding an emoji can, for example, like make it clear that you're joking in an instance. Whereas if the emoji wasn't there, like they might not be sure. They might think you're actually serious, and then you might come off as offensive, for example. Like simple things like this can, I think, really like change the quality of your communication online.
And bro, like now that you mention it, I think I do the exact same thing because my text is pretty cold. But I always try to add like a winky emoji or like a crying emoji at the end. Um,
Yeah.
you're doing the exact same thing. What's your favorite emoji?
Um, wait, let me check. Let me see my commonly used emoji. So, I don't know if I can narrow it down to one, but like,
A few, no
let me
problem.
do top three. So, like, one is Pepe holding the heart.
Okay.
That's great. I like the Pepe with the salute where he's saluting.
Yeah.
I like that one. And I like the Pepe with the gun.
Right.
What's good about the
Nice.
gun one is that it's so aggressive that people know you're joking.
Yeah.
Like basically always. Like so you can like show aggression, but
I don't really.
basically be 99% sure that they understand that you're joking,
Yeah.
which is nice.
Exactly. I think for me the most popular one for me has been the salute. I think that came out fairly recently on the iOS. And here's a random note. If you use the default emoji on your iPhone, it actually doesn't appear in Discord.
Huh.
Yeah, it
So
becomes
it's
like a
that
box.
new.
Yeah, it's that new. It's like a box. But anyway, I love that emoji. And emojis
Yeah.
are actually quite cool because it actually tends to tell the age of who you are. So like I don't know what age you are. I'm gonna guess you're roughly around the same generation, like late 20s, early 30s, late 30s. And I think a lot of us use the crying emoji, but the really young people, like I would say the teens, it's mainly the fire and the skull.
I'm not even sure which one you're referring to.
There's the skull
I
emoji, like it's basically their reaction if it's funny. So like for example, if we think something is funny, or at least I think something is funny, I would
yeah.
give the crying emoji, right? So the emoji of the two tears coming on both sides. But for the teens, they would give the skull, the one with like it's literally just a skull.
Huh. Wow, I don't understand that at all.
Yep.
I will
Took
say
me a while.
if if something's funny, like I love how there's nuance. So there's like the crying tears of joy face.
Yeah.
Then there's the I hope listeners understand. There's the Leo Keck face.
Leo Keck face.
Yeah. I mean, so there's the Keck face, right? There's the Keck where that guy is doing that insane cackling. But then there's this other like Leo Keck, which is like it's like the point being like all these are like different kinds of laughing, and it's like very subtle differences, but like their usage is yet like still pretty clear.
Hmm. Great man,
So
emojis.
yeah, I love the diversity.
I love it too. All right, cool, man. So let's go back to that super hard description of what Lifinity is. You say it's a proactive market maker. So for the new people who don't really know what liquidity pools are, I think we need to start there, right? Like, could you help us like explain to the users what that is?
Sure. So let's say you have a person who wants to convert their soul to USDC. Now, if we didn't have these pools, I guess what you might imagine would happen is they look for someone who's looking to buy Sol with USDC. So first of all, that's hard enough of a problem finding a counterparty for your trade.
Yeah.
But then also you two would need to agree on a price and
Mhm.
on a time to execute this trade. And like there's a lot of complexity involved with doing trades peer to peer. And for that reason, it makes sense to aggregate or like have some form of aggregating trades. And so pools are one way of doing this. This is like a DeFi thing. I don't think you find this in traditional finance.
I don't think
But so
so.
basically, what a pool is some protocol will enable users to deposit their funds. Usually, that means depositing both funds or both assets within a trading pair. So, for example, if there's a Sol USDC pool, people can deposit both Sol and USDC. And then the protocol will, in some way or another, determine what the current price of each asset is. So then, now that there's these pooled assets, what's nice about that is now if somebody wants to trade, they can just trade against this pool whenever they want, however much they want. So it eliminates all the complexity involved with having to find a counterparty, the time of the trade, how much to trade, at what price. All that is determined by the protocol, so that you can do trades instantly whenever you want.
It's awesome. If I could summarize that, it's basically two assets in a basket, and people can put in one asset and take out the other if you want to swap. So that's pretty much it.
Yeah.
And if you want to use the basket, you pay a tiny fee to the people who put money in the basket to begin with. What's awesome about LPs or liquidity pools is I think it's probably, in my opinion, the most underrated but the most powerful thing in DeFi. like as you mentioned, it's not anywhere else. It's not traditional markets, and they have huge problems. They don't right now because it's so developed, but you have all these kind of like market makers that need to exist to close like bid and ask price gaps. You have all these piping that needs to be done. And crypto has basically invented a way of, well, we don't need any of that. And it doesn't matter if you have people readily available. There is this thing which you can trade against and it's going to work. So it's beautiful. And I think people take it for granted, but that's pretty much what powers almost all of DeFi. So LPs are pretty cool.
Yeah, for sure. I guess the one problem that makes it so that, um, like, of course, it depends on the model, but makes it so that these pools are not as powerful as market makers and traditional finance is that usually the algorithms that are used to determine the price of the assets uh, are not sophisticated enough so that they end up trading at bad prices. So, in other words, the people providing the liquidity, the LPs, they end up getting the short end of the stick. Um, because professional market makers, they have very sophisticated algorithms to ensure that they only trade when it's favorable to them, and they try very hard to avoid making bad trades. But if you just have a very, very simple algorithm, like much of DeFi tends to have, then it's easy to get wrecked by providing liquidity.
So could you elaborate a bit more on why the providers get the short end of the stick?
Yeah, so basically it comes down to the fact that um, every DeFi or most DeFi protocols don't look at the outside world and what's going on. They only look within their own protocol and the assets that they have to determine what prices they have or they offer traders. So professional market makers, they're looking on the venue that they're trading, probably a centralized exchange, and they're looking at what prices other market makers are offering on those exchanges because they're competing with them.
Mhm.
But not only that, they're also looking on various other exchanges and seeing what the prices of assets on those exchanges are. So just to run through a simple example of why they do that, say they're trading Sol USDC, and currently the price of Sol is $40, and then on some other exchange where they're not trading, say somebody makes like a giant trade, and suddenly the price of Sol goes to $50 on this other exchange.
Yeah.
Um, if that happens, what they can expect to happen next is that people can buy Sol from them on their exchange at $40 and then sell it on this other exchange for $50. And then they make $10 per Sol on that trade. So basically, that's what's
Arbitrage.
called arbitrage. Yeah.
Yep. Fascinating.
And if that happens, they're basically getting the short end of the stick because it means they ended up selling Sol at too cheap a price. Rather, once they saw that the price went to $50, they should adjust the price that they're selling Sol at. Like they should say to themselves, "Oh, someone just bought a ton of Sol over here, which means the price of Sol is going to go up a little bit because these arbitrage trades are going to make that happen." Basically, the end result of these arbitrage trades will be that the price of Sol on the exchange where it's $40 is going to go up, and on the exchange where it's $50, it's going to go down. They're going to meet somewhere in the middle, say $45. So they should, before those trades take place, instead of selling Sol at 45 or $40, they should just move it up to 45 or something like that immediately, so that they don't end up selling Sol too cheaply to these people.
So aggregators solve this problem on DeFi, right?
Uh,
No.
no, not for the liquidity providers. So
Okay.
aggregators are great for traders, but so the problem for the liquidity providers, the DEXs, is that like I mentioned earlier, they're completely blind to what's happening outside of their DEX.
Yep.
So, of course, this depends on the model of your DEX, and Lifinity is not this way, which I'm sure we'll get into. But so on other DEXs, basically they're just looking at the how much of each asset is in their pool right now, and that's how they determine the prices. They don't care how much assets are in other DEXs. They don't care about the trades that take place outside their DEXs. They only care about what's in their pools. And so basically, they're guaranteed to be arbitraged.
So what's the next step to solving this?
Yeah. So, one way to solve this, namely the way that Lifinity is employing right now,
Hmm.
is to use an oracle. An oracle is basically another protocol that tells you, in the most generalized form, it's a way for people to post information about the outside world onto or put it on chain. And then programs that are on chain can use that data. So the way Lifinity does this or uses this is other centralized exchanges and market makers and traders will share their market data for different assets to the Oracle. The Oracle we use is called Pith, by the way.
Yep.
So Pith aggregates all this data from market makers, etc. For example, for the price of Sol. So these market makers are watching the price of Sol on like FTX and Binance and other centralized exchanges, and this data is posted on chain. And so Lifinity is able to view that data. Basically, a sophisticated way of calculating the average price across all DEXs and centralized exchanges for Sol. And so we can use that as the reference price for where we should be buying and selling Sol right now.
Mm.
Um, and because we do this, we're basically able to avoid those arbitrage trades. To go back to like that example, as soon as the price of Sol goes to $50 on this other exchange, that data is incorporated into the Oracle price. So we instantly move up the price at which we're buying and selling Sol to account for that.
Okay, so walk me through. I'm a user. I'm a super huge whale. I want to buy like $1 million worth of Sol. I'm going to use USDC. I'm going to swap it. What happens?
So from the trader's perspective, it's very different. I mean, like uh, the traders never have any problem. From the trader's
Yep.
perspective, all they're trying to do is get the best price.
Yep.
So they just use an aggregator, and they're routed to whichever exchange is providing the best price.
So it doesn't take into account like the central exchanges.
That depends on the aggregator.
So let's say I'm
So
using
like
Lifinity itself. Like I'm not using an aggregator.
sure. So our front end integrates a aggregator so that our users always get the best price.
Mhm.
But and just to like go with your example, assuming they're literally only trading through Lifinity,
Yep.
I mean, in that case, they'll just get whatever price we are offering.
Okay.
Yeah.
So then the
So
arms would
really,
still go on.
what's that?
Wouldn't arbitrage still go on?
If so, like if they ignore aggregators and trade on Lifinity regardless,
Yep.
and it happens to be the case that we're not offering the best price, or even if we are and their trade size is extremely large,
Yep.
then yes, once they buy Sol on Lifinity, the price um, for Sol that we're offering will go up relative to other decentralized exchanges. So
Mhm.
then it's possible that there's an arbitrage opportunity, except for us, we don't really care because we're not really being arbitraged. So like the
Yes.
trade is an arbitrage and half of the trade is through Lifinity, except the price we're trading at is the quote true price. And so it's like basically we can't be arbitraged. I'm kind of simplifying things, but
Yeah.
TLDR, like, yeah, because we always true at the actual price, we can't be arbitraged. So like people can do arbitrage trades that involve both Lifinity and another DEX,
Mm,
but only the other DEX is suffering the negative consequences of being arbitraged. Whereas for us, it's just another trade. Um, every trade is just another trade. There's
okay.
no like negative trades.
So most LPs don't care about what other prices are, right? They just have an algo in there or a smart contract, if you may, and whatever's being traded, there's just a way to calculate what a price is. You mentioned that Lifinity uses PIF. So how does that come in into the LPs?
Yeah, so basically everything I explained up until now, where like Lifinity is able to avoid these damaging arbitrage trades. This
Yep.
benefits the LPs, not the traders, but the LPs.
Okay.
So yeah, so basically it's very important for the bottom line of people who are providing liquidity. So Lifinity is kind of unique in this regard too. Um, Usually, dexes just have outsiders provide the liquidity, and they keep most of the fees and perhaps liquidity mining rewards if they have that.
Mm,
But with Lifinity, the protocol itself owns most of the liquidity it's providing. Um, so, an important consequence of this is that normally, because the protocols don't own the liquidity, they don't really care about impermanent loss. They don't have to. All they care about is the trading fees because that's
yep.
the part where the protocol is able to earn. And because they don't earn the asset, they don't own the assets in the pool, the liquidity. Like even if there's impermanent loss, so impermanent loss is this word for those damaging arbitrage trades that we were talking about.
Yeah, I was going to
Um,
ask you to explain that. So thank you.
yeah. And another way, I guess, just to give another analogy, the simple way to think about impermanent loss is it's basically just buying high and then selling low, which
Yeah.
results in a loss. Yeah. So normally protocols don't have to care about the impermanent loss because it's the liquidity providers who suffer the negative consequences of it, not the protocol. But for us, because the protocol owns much of the liquidity, if we experience impermanent loss, the protocol itself suffers. So, like, it's very important for us to mitigate this. And our use of the Oracle does precisely that. Um, yes. I forgot what your original question is, but
I was asking how the Oracle comes in. Um, what Oracle role is used in Lifinity's LP? Like, why is it different from other LPs?
yeah. So, I think I,
You explained it.
yeah. I think I just explained it.
Yeah, pretty much. So, um, correct me if I'm wrong, because I'm trying to understand too. So, I understand a normal LP pretty much just operates on a math formula, right?
Yeah. So, um, the most common form of liquidity pool and the very first type of automated market
Yeah.
maker, as they're called,
Generation one. Yeah.
yeah, you use this equation that's just x times y equals k, where k is a constant and x and y are the amounts of the two assets in the pool.
Mm,
So basically, the amount of USDC multiplied by the amount of SOL equals some constant K. So if you decrease the amount of USDC in the pool, then you have to increase the SOL by a proportional amount so that their product always remains this same number K.
all right. And for Lifinity, you guys don't use that equation, or you do use that equation, but there's an additional component which is PIF. So how does that come in?
Yeah, so we basically use like a modified version of that equation. Um, So that first one I explained is Uniswap v2. Uniswap is the protocol that first developed a smart
Concentrated
contract for
liquidity.
that algorithm, that AMM. Yeah. And then they evolved it into Uniswap v3, which now allows what's called concentration.
Yeah.
So without concentration, basically your liquidity is spread out from 0 to infinity. So it's basically very thin. It's yeah, spread out very wide. And when you concentrate liquidity, you don't need as much assets to provide deeper liquidity. This also comes with higher risk of impermanent loss, that thing we talked about earlier.
Hmm.
But yeah, it's much more capital efficient. So, which is why a lot of people favor it.
I
So we
love it.
concentrate around the Oracle price. Normally in Uniswap v3, users themselves have to decide the price range that they want to provide liquidity in. So, for
Mm.
example, one user could say, okay, I'm going to provide liquidity for Sol USDC when Sol is between $30 and $50. And then if the price ever goes out of that range, less than $30 or greater than $50, then they would no longer be providing liquidity. And in fact, they would just have one asset then. Um,
Yep.
yeah, yeah. So that's kind of inconvenient for liquidity providers because one, they have to choose a range, which is like the best way to do that is very non-obvious. And in fact, studies have shown that on average, liquidity providers tend to lose money on Uniswap v3 at least.
Oh, I didn't know that.
Yeah. You can check our Discord. We have a Twitter thread that links to that study. But also, it's kind of inconvenient because if you don't want to go out of range and you want to continue providing liquidity, that means you'll have to continually adjust your liquidity as the price changes.
Yeah.
So, like, not a great user experience.
So you guys
Um,
do that automatically, right?
exactly. So we concentrate around the Oracle price. So yeah, we just automatically center it, change the center point to the Oracle price every time the Oracle price changes.
Hmm.
So yeah, from a UX perspective, it's much simpler.
Okay. So I'm a user and I heard everything you said and I'm convinced and I want to add to the LP. What do I do?
Yeah, so the depositing process, I would say, is like very similar to any other DEX. You just choose, you go to our site, you choose the pool you want to deposit in,
Hmm.
um, and then select how much of your assets you want to deposit. And yeah, that's about it. I should mention that some of our pools are full. This is because our very best pools. So basically, we're so capital efficient that we can't accept much liquidity. This is yet another way in which we're different from other dexes, which normally look to maximize the amount of assets on their pool.
Yeah.
You may have heard um, projects talking about their TVL, their total value locked,
Mm. Yeah.
and the bigger, the better. We're not like that. We're not trying to get as much assets as possible. Um, Basically, our goal is not to maximize TVL or volume, but to maximize profitability
I
and
love that. That
increasing.
should, yeah,
What's
that
that?
should be the goal for everyone. Maximize profitability. That should be the goal.
Yeah, uh, it seems obvious to me, but it's
It's not.
unfortunately it's not really the case, at least not yet. The bear market may be helping change that a bit, but
Yeah.
yeah, but because of that, increasing the amount of assets doesn't necessarily translate to increasing your profit. And so some of our pools we're capping to maximize their APR.
Mm.
So basically, all the liquidity in those pools, none of it comes from LPs. It's all the liquidity from the flares, so the flare owned liquidity or the protocol owned liquidity.
Mm.
And yeah, that's the case for our most profitable pools. So right now, those are Sol USDC and Sol USDT, I think.
Are they maxed out? Like, can I add to it?
Yeah, they are maxed out, so you cannot. So even if they were,
No.
yeah, if they weren't maxed out, we would add more of our own liquidity instead of looking for LPs. So the thing is, like, if we accept LP deposits, they take away a lot of the trading fees.
Mm,
So this is like the difference between the protocol owning the liquidity and outsiders providing the liquidity. If outsiders are providing it, then the protocol can take only like a small cut of the trading fees, say like 15% or something. Whereas if the protocol owns all the liquidity, it gets to keep all the trading fees.
exactly. Everything.
So yeah, this is like one way in which we're looking to maximize our profit.
Nice. So if you're a user and you can't put LP, what's your recommendation for people who want to invest in Lifinity?
Sure. So, yeah, not all pools are full. So there are some pools that you can deposit in. Just check our pools page. If you want access to like our Sol USDC, basically like our most profitable pools, then the way to get exposure to that, there's two, I guess. One is through our flares. Um, yeah, the flare own liquidity or the protocol own liquidity, which would be through the tokens. So you can either own a flare, which is designed to increase in price over time through buybacks, or you can buy either Lifinity and lock it for VE Lifinity. So VE Lifinity is our locked version of our Lifinity token, LFNTY.
Mm,
Or you can buy X Lifinity, which is a tokenized version of 4-year locked VE Lifinity. And 4 years is the maximum length of time that VE Lifinity can be locked for.
that's a long time, man.
So
4 years.
it is, yeah, it
That's 40
is.
years in crypto time.
Yeah, indeed. 4 years is a long time.
Nice. Yo, like that's a lot of technical stuff.
Yeah,
Um,
I know.
have you tried explaining any of these to your friends in real life?
No, I actively avoid it actually, because like there's just no way they'll like I mean they don't even understand X times Y equals K.
Bro,
They've never heard of VE tokens. They probably never heard of an example of like revenue sharing
you
um, or buybacks.
might
Like,
meet might
yeah.
meet new friends, man.
Yeah, no, this is why I now try to just avoid talking about crypto with my friends. It's just not very fruitful.
Yeah. What about family? Like what do your family think about you working in Web3?
I mean, I've tangentially tried to talk to my family about crypto.
Mm,
Um, I would say I've had limited success with my siblings, and zero success with my parents. I mean,
oh
like, I
no.
think if I were to convince them, we'd need to start somewhere much more fundamental, like the basics of how economics work.
Mm,
Um, like for example, like the inflation of the U.S. dollar over time, like
yeah,
concepts like that. I don't even know if they've ever seen the purchasing power chart of USD over time, for example.
I highly doubt it.
So
But that
yeah.
that leads to another problem, right? So like we always talk about crypto adoption. Do you think that our parents basically need to be able to understand crypto um, to get that adoption we need? Or you think that, nah, it doesn't matter. Like, we just need to like teach the next generation and then we'll just go along with the times.
I don't think they need to necessarily. So like just using my own parents as an example, they like finally got cell phones like a few years ago or something.
The Solana
Like
phone?
pretty if only. But like pretty late, right? Even for like people in their
Wait,
50s,
your
I
your
think
your
that's
parents didn't have cell phones until like last year?
a few years ago.
If you
Yeah.
then how would they call people?
Well, exactly. So this is the point I'm getting to is like eventually, like things just become so inconvenient without it, and like everyone around
Right.
you has it. I mean, like they were the so-called late adopters for phones, but I mean, even if they weren't as late as them, like there were the people in their generation before my parents who got a phone, say like 10 years ago,
Mm,
which you still might say is like slightly late.
super late.
So like more and more like crypto just becomes useful and people adopt it because it's simply useful, not for like financial speculation.
Right.
So yeah, I feel like yeah, crypto will start to infiltrate the culture in like directly useful ways more and more.
Do you think we're useful at this point yet?
I mean, in some ways, certainly. Like, for example, I get paid in crypto, um, which is like very easy. Like, it's better than like bank transfers, right?
Mm,
I mean, there's a ton of people who rely on crypto for like simple payments or remittances and stuff.
mm.
Like, so I mean, that's an obvious use case. I mean, I think DeFi is one important use case. Like, I don't have, anything set up with like a stockbroker or whatever. Like, I've never experienced any of that kind of thing,
Lucky you.
and I don't think I
Don't go
want
there.
to. It
Yeah,
sounds
don't go
like
there.
hella cumbersome.
Nope, don't go there.
Yeah. So I mean, and like I'm like lending my assets and earning interest on that. Like, how hard would it be to do that in TradFi? I have no clue. I don't want to know.
You get like your 0 point something, zero, whatever interest rate, and that's pretty much it. And you don't get any interest in your stocks. Maybe dividends for
Yeah.
some of them, but most of them don't have any of that.
Right.
Yeah. All right, man. Um, Craziest story you heard in crypto.
I mean, I don't know if I'm the right guy to ask. It'll probably be some like Twitter story I read.
Or just rumors?
Uh, Craziest story.
Or how about this? Worst trade you've ever made in crypto?
Worst trade. Let me think. I mean, probably like
Too many good trades. Only good trades.
no, no, no. I'm not a good trader. I mean, so actually, yeah, I don't really. I'm mostly like a hodler essentially.
Okay.
Like, so I bought for the first time in near the end of 2017, held
Oh,
all the way through 2018 and 19, and yeah, I just like basically keep adding to my stack, but never taking profits, which I think I should learn to get better at. um, So yeah, I'm basically like in the same situation right now. I only took profits from like my shit coins, basically like non-major tokens. But I
where
just
you made
held on to
profits in your shit coins, that's something.
say what?
It- the fact that you've made profits on shit coins says something. That's
Well,
rare.
well, well, not every shit coin. I mean, some I just sold. When I say take profit, I mean what I really mean is convert to USDC.
You
Some
don't
were
know what your
profit, some
profit
were
is.
not.
If you don't check, you
Yes.
don't know, so it's good.
Yeah, that's one way to approach it. Yeah, and I feel like yeah, I should get better at taking profits along the way.
Mm. I think a lot of people like have this concept of DCA, but they DCA in, but they don't know how to DCA out. So yeah, that's a
Right.
problem. All right, I'm gonna go one last section. I call this rapid fire. Basically, I just shoot out random words and you can answer in a single sentence.
Cool.
Don't overthink it.
Okay.
Satoshi Nakamoto,
Japan.
Japan. Wales,
Wales,
Wales.
my future.
DAOs,
Overrated.
Solana Summer,
Inevitable.
college education.
One of the biggest regrets of my life, kind of. If
Oh
I were
no.
wiser, if I were wiser, um, if I were more aware of my options back at the end of high school, I would have definitely not gone to college.
Did it even bother asking for your college cert when you hired you for Lifinity?
No,
Exactly. Oh
exactly.
god. All right. Metaverse.
I hope it's awesome.
Mhm.
Cautiously optimistic.
Apple or Android?
Android,
Coffee.
every day.
Favorite Pokemon?
Uh, hmm. Um, wow. I haven't thought about Pokemon in so long. I feel like I had a favorite. What was it?
But you have played Pokemon, right?
I have, but
Yeah.
damn. I also don't know the English names.
Ah,
I know the Japanese names,
what does it
but
look like?
I'll just go with Jigglypuff for now.
Jigglypuff is awesome. All right. Anonymous teams.
Really not too different from non-anonymous teams.
Rug pulls.
Rug pulls. Fuck them.
And last but not least, Lambos.
Not interested in cars.
Sounds good, man. All right. So, that's pretty much the bulk of it. What can we look forward in the future with Lifinity?
Yeah, so we're always working on new stuff. Some of the things we're working on right now is probably most importantly opening more pools.
Mm,
Right now, in particular, we're working on the specific type of partnership that we explained in an article. It's called Market Making as a Service and Liquidity as a Service. So, yeah, basically, these new pools require us to make a custom oracle. Um, and this basically enables liquidity for pairs that would otherwise be very, very difficult, would require a bunch of liquidity mining, but we help protocols um, avoid that or make it much cheaper. So, yeah, a bunch of those new pools. Another thing we're working on is volatility adjusted fees. So, basically, what professional market makers do, one of the things they do is when prices are more volatile, that means they're taking on greater risk of buying and selling at bad prices. So when the markets are volatile, they tend to increase their spreads. Basically, they take a larger fee, is another way to think about it. And so
mm,
that's what we're trying to do. We're trying to adjust our fees based on the current volatility of the market.
cool.
Let's see. Another thing we're doing is implementing a compound to VE Lifinity button. So right now, when you receive your rewards, you just get a bunch of different assets. Some people like that. Some people would rather convert all those reward assets back into VE Lifinity so they can compound. So we're building out that functionality. And there's probably a few other things that we're working on right now. Oh yeah, dashboards is one of them. So like we have a bunch of tokens and NFTs, and there's a lot of data that people would like more visibility into around those things. So we're working to create dashboards that visualize a bunch of this data. This will be rolled out gradually because there's a lot of data that we want to show. But yeah, start off with a few dashboards and increase them from there. So yeah, those are some of the things we're working on right now.
That's not some, bro. That's like a lot of things.
Yeah.
Sounds like you guys are gonna be super busy. All right, cool. Last question before you go. Who would you like to nominate to come on next
Come on next.
after the podcast?
Yeah. Let's see. Let me scroll through my Discord. Okay. All right, I will nominate Galileo from Friction.
Nice. Friction.
Yeah.
I've been very
Or
interested in
actually, wait, did I
friction.
say Galileo? I meant Leonardo.
Good.
I think. Yeah.
One of the famous guys.
Yeah.
All right,
Oh
perfect,
wait,
man.
maybe it is Galileo. Okay. Okay. Yeah, there's both of them. One of them. I
Both of
must
them.
always be confused about which is which, but Galileo or Leonardo, one of them.
Okay, maybe you can get two of them. Come on, that should be fun.
Yeah.
All right, dude, it's been fun. Thank you so much. I really appreciate your time and coming on the podcast, and hopefully the users would learn a little bit more about Lifinity and feel a little bit more connected to you.
Awesome. Yeah, I had a great time too. Thanks for having me on.
Hey, people, I hope you enjoyed listening to our podcast. Our Solana Insights podcast is all about having real conversations. We talk to builders and users of Solana and make their stories available to all. To listen to more of our episodes, come find us on YouTube, Spotify, or Audius. And if you'd like to chat, hit us up on Reddit or Twitter. Solana Insights is a not-for-profit organization and is made possible by Player 2. Until next time, this is Moo, signing out.